Hi everyone and welcome to today's morning report on Monday the 7th of March with me, Rich Perry, market analyst at Tech Markets. European trading sessions got to a slightly negative start. I say slightly, it's sort of between 0.5% and sort of 0.75% down on the European equity markets. There is an air of dollar strength going through the market again, um, but also less risk appetite as well because the yen is outperforming and also gold is stronger. Um, the move is coming on the back of you had payrolls report on Friday, which was a mixed report really. It didn't do a great deal um, for the expectation of a March rate hike, but sort of pulls June back on the table. A lot of questions through the report as well, though. Strong headline growth, but weaker earnings growth, which is sort of drives that mixed report. But also, we've had over the weekend this meeting in China, the Chinese National People's Congress, where the government sets out its growth targets for the year. 6.5 to 7% is the expectation for this year, and that's down from 6.9% GDP growth in 2015. And also, it's the first time they've ever done a range of targets as well. But they have sort of increased the target budget deficit to 3%, and that's up from 2.3% that it had in 2015. So what we have got is a sort of a mixture of a reaction really today. But the dollar is stronger generally. Now let me just show you where we're at with the dollar. We had that negative, bit of large amount of volatility on Friday, but generally speaking, weaker dollar. But that's rebounded today. Back to where it actually opened on Friday morning, pretty much. And that's coming as these Treasury yields have just started to push higher again on the 10-year and the 2-year. But interestingly, we're still seeing commodity prices stronger. We're still seeing the oil price pushing higher. That's sort of generally positive for risk appetite. So it's an interesting reaction that we're getting today, but that's helping FTSE to sort of outperform the DAX, I think, today. But generally speaking, we are seeing markets sort of slightly weaker today. But whether that lasts or not remains to be seen. I mean, we've got no real economic data to help to drive expectations this week, and we've got a lot of important Chinese data, but also the ECB on Thursday. So traders are going to start to position ahead of those meetings, those announcements, I think. So we've got a slightly risk-off appetite today, but generally speaking, I think we're going to be pushing towards the ECB meeting for the main driver of the week. So that takes me to my chart of the day because there isn't any economic data today. My chart of the day is the Aussie, and we had a strong breakout on the Aussie on Friday. Look at these, just run higher in the past few days on the Aussie. Huge gains actually. And that is a big breakout because that is an old resistance that comes in at 73.85. Big resistance that's now been broken to the upside and takes you above the October-December highs. And can it hold the breakout? Because it's obviously, zoom out here. You can see every time it gets towards 70 on the RSI, it fails, and the market starts to roll over. So 70 again hit on Friday, and it's actually started to roll back again. Slight bit of profit taking, you could argue, but will that breakout last? I think 73.85 becomes a basis of support, and I think generally speaking, between 73 figure and 73.85, I think is a key level. 73 figure, sort of these highs here from late December, early Jan. So you've got sort of 85 ticks worth of pretty decent support there, but I think if you started to see a close back below 73.85, I think that is sort of turning a bit more corrective, and I think certainly back below 73 figure, I think that would be again, you'd be coming back towards this uptrend again. So it's interesting to see how this one pans out, but at the moment we're just sort of consolidating that breakout. Slight sort of opening gap lower today, and it's still actually open. From the sort of resumption of trading after the weekend, but the Aussie is about 0.5% lower, and you could argue just rolling over on these momentum indicators, isn't it? Look at that, the 21-hour moving average, which had been the base of support, rolling over. So interesting that we're starting to see that already. So it needs to hold above 73.85 as the breakout, but also 73 figure is a big supportive element as well. So interesting break on the Aussie, and it'll be watching out to see if it can hold the break, but being tested at the moment. So I wish you good luck in your trading today, and I will speak to you later.